What is going on, everyone? Welcome to another video. In this video, we're going to be explaining with statistical data in the AceFX backtesting spreadsheet how to become more profitable if you are a struggling trader with the AceFX systems. I've compiled a lot of data in the AceFX backtesting spreadsheet, pretty much trading, backtesting the A1 system. So I have Austin with me today to use his knowledge and experience to go over this data, and we're going to share some really good insights into how to become consistently profitable.
Yeah, I think the goal, like you said earlier when we were setting up the call, is really just for us to explain to everyone how important it is to be selective in your trading. And that's easy for us to say as coaches or as trading mentors or friends to anybody. It's easy to just say, hey, you're not being selective enough. We're going to use data today to kind of back up that idea. And also, we're going to talk about the parameters, specific parameters within the ASFX system. So if you've taken our courses, you'll know the language we're using. You're going to learn today which of those parameters are most important to be paying attention to and to be using when you're trying to be more selective in the trading. So if you're taking notes when you're watching here, just keep in mind the goal is to be more selective and why you need to be more selective. That's what we're trying to do here. If you don't need to be convinced already, you know what I mean? But I'm excited for this, Jerome, because I think that a lot of guys in our group signal. They understand the rules that go into it. But when it comes down to making money month after month after month, there are aspects of that that are not discussed in our courses. So I think this video is going to be a really good video, a wide range for us to cover here. So let's get into it. Where do you want to start?
So I'm going to share my screen and exactly just elaborating what Austin said. Anyone can tell you be selective in your trading. We preach that here at ASFX. And I think this data will really show you the importance of being selective and how it will really kind of increase your profitability. And if you're a struggling trader, will make you kind of more consistently profitable going forward. So let me share my screen here. All right, cool. Can you see my screen, Austin?
Yep, looks good.
Perfect. So basically, this is the AceFX backtesting spreadsheet, and I won't go too much into this in this video, but you can see we have over 800 trades across multiple different pairs that I've tested this past 2-3 months. And it's 802 trades across Auto GBP pairs and Euro pairs. So the first thing I wanted to point out, and you can see that this system turns a very good profit. Now, one thing to remember, if you go down to this tab at the bottom here, you can see there is no way humanly possible you're taking 83 trades in a month.
Right. That was the first thing I noticed, Jerome, was that. Before you go into that, though, can you explain just and maybe zoom in on the left side of that so we can see what the profit would be? You said it'd be really good. What was the return over the 802 trades?
If you are risking 1% per trade with well, it doesn't really matter what account size, but you would be returning basically 528% over 1 year.
Oh, I see that there.
From July to July.
Got it.
With a 7,500 drawdown. So 7.5% drawdown, 57.23% win rate.
Not bad.
It's not bad. So the only way possible to trade this would be like a robot or an EA. There's no way you are taking all these trades per month.
Right.
And the importance of seeing this data to kind of tell you, hey, this system performs very well, even with a 57% win rate. A lot of traders, even within the AceFX community, just taking A1s can easily make this a negative returning system just by not being selective. So the most important topic and data I wanted to show everyone is basically the wins and losses. Now, because you're taking so many trades per day, you are going to have multiple signals at the same time across multiple pairs on the same day. And basically, if you have very little parameters in your trading, you won't know what trades to take and you'll start taking every trade. Now, as you can see here, taking every trade will result you in a profit, but without the rules of being selective, you are not going to take consistently the right trades over and over again, resulting you in maybe taking the negative trades, the losing trades over and over again. And because you won't have a statistically or a systematic approach and it will be randomized, you may be always just taking the losing trades,
So wait, Jerome, is what you're saying basically like, because we're not a robot, we're not an EA, we can't be awake for all of these trades and we can't possibly think we're going to hit all of these trades. So like if you came in right there with all those losses, you might take all those losses, but look before and after that, there's a bunch of wins. So is that basically what you're saying?
Exactly. So we're going to go into another. So I've filtered the trades and I'm going to show you exactly kind of the process and how to increase your profitability, especially if you're a struggling trader. So with this data, basically what it represents is the randomness of the market. We are obviously never know what trade is going to win or lose, but what we do know is that we have a systematic approach, as everyone knows at ASFX, and following that approach, being selective is the key in this topic. Will definitely help you return a better profit. So jumping over to this one over here, you can see we have a 63% win rate and 208% return. Basically, this is just taking out all of the overextended candles. So we have all the other parameters, counter trend, trending in the Asia range. The only one thing I should have mentioned earlier is the only parameter I didn't trade is a swapping L50. So all of those 800 trades had a perfect L50.
Good to know. Okay, that makes sense. And then this second spreadsheet, you went from 802 trades down to how many?
499. This is just no overextended candles.
So just by not trading the overextended candles, you take out 300 trades, which a lot of people in the group are already avoiding overextended candles. So now you're down 300 trades already right there, 300 less trades to be involved in. And that's 300 trades less. So right there, that 499 is 500 trades. Again, you're not going to be awake for all of them. You won't be at the desk for all of them. So you won't be in all of them. So now we're slimming it down even more. So being selective here, does it increase the win rate and does it decrease the drawdown? Like, what does it look like there?
So it decreases the drawdown. Let me just to $6,000 from 7.5.
Okay.
And it brings up our win percentage by roughly 6%. So
nice.
Overall, this is still too many trades within a year. You are still taking up to 46, 53, 44 trades a month, which is, you need to be more selective. You need to have a more kind of stricter approach into what trades you are taking. So this brings me to what I have done with my trading and my data going forward. And that is all trades that are out of the Asia range, all trades that aren't the first break of the Asia range. So if we have an A1 formation and it breaks out of the Asia range on the entry candle, I've gotten rid of all those, all that data, and no overextended candles. The only thing I've kept is trending in counter trend and the RSI overbought, which technically is a B setup. So you can look at all these trades as being a B grade setup. Here at ASFX, we grade our setups. So this obviously nets you a 73% win rate over 145 trades. And if you're taking partial profits, it's going to give you a net 120%, like I just said. And basically, you have a drawdown of only $4,000. So going through this data, you are only taking on average about anywhere between 12 and 15 trades per month, which is very manageable. It's about 2 trades per week. Or 3 trades per week, sorry.
Yeah.
So obviously, this is kind of showing you guys the benefits of being selective. And one thing I don't want everyone to look at is you are netting 500+% return there, and you're only netting 120% return here. 120% within a year is still amazing. That is outperforming a lot of instruments, especially as a day trader. And once again, we aren't even going to be able to execute on all of these trades here. And we're going to make mistakes. We're going to because we haven't really got a systematic approach, you are literally taking every single formation that presents. You are going to make a lot of errors, basically. Another thing I want to add as well, I've actually categorized my candle formations. So going forward, I've actually kind of given myself what candle formations I can trade. So as you can see with the candle formations here, we know with ASFX, we need a candle formation off a significant EMA. And I've excluded, obviously, anything that doesn't come off a 21 EMA. And if it's a candle formation like this, where we have, if we're going short, if it's a bearish candle followed by the bearish signal candle. So I've even categorized that down to have a more systematic approach. And that's basically all this testing is.
It makes sense. So I think what I'm most interested in as far as like being selective, because I feel like if I was somebody watching this, what would I, if you like were trying to coach an individual trader with the coaching calls that you've been doing, what would be the first parameter you would tell people to take out of their trading, or don't do it unless it's this? Would it, I guess, of course, be don't trade a swapping liquid 50, but
Exactly. So
would that, yeah, that would be it.
that would be it. And then I'd follow it by don't trade overextended entry candles.
Okay.
And then I would follow it by only trading price action out of the Asia range.
How significant do you find RSI overbought, oversold? Does that dramatically increase or decrease the win rate, or is that a
It's
more weak parameter, as I've always thought it's been?
It's kind of neutral.
Neutral.
It doesn't really affect it too much. I find that RSI being oversold or overbought, basically, it doesn't really impact it too much. It is something to be aware of, definitely. But going forward, especially with GU, just because I had so much momentum on GBP USD, it didn't really make it any effect at all.
Now, of the final spreadsheet that you did, could you go to the dashboard here of this one? How many total trades was it for here?
145 from 802 trades.
Do you know what time of day majority of those trades presented?
Yes. So all my testing was done between 5 p.m. Sydney time and up to 11 p.m. Sydney time. So just pretty much after the Asia session, the London Open, and then all the way to midnight. Session.
Yeah. Got it. Okay. Cool. So that's normally when people are trading. So
exactly.
Makes sense. Okay. And what month did you have the most trades there? September, or is that the best performing month?
August is the best performing month. I've noticed in my testing. Okay. Compared when individually testing each of the pairs, August was one of the best months.
GU was the best pair. GU, Euro CAD.
Yes. So GU, CAD. JCH. Yeah. So GBP, Euro NZD, and Euro USD CAD, they were profitable, but they were like, I think, a 40% win chance. So I didn't add
a lot lower.
Yeah.
Got it. Okay. Are there any other important statistics that you gathered from just the narrowing down of the trades from the 800 or so to the 145? Do you feel like you could have gone about it a different way, where you removed other parameters and maybe you had a 200% gain and still limited the trades?
That's a good question. So let me just stop sharing. So pretty much what I would suggest going forward for AceFX members is I would test. So I didn't test divergence in this. The reason was because I was just fully at a 2R risk to reward. If I was to test it again, I would definitely include swapping L50s. And actually, let me share my screen again. So I've basically been playing around with scripts, and I've managed to add in a grading system for the AceFX backtesting spreadsheet. So you can see at the bottom how it gives you a grade, A, B, C, or D. And then if I just come over here, you can see how it basically calculates the grade based on how many red cells were over here.
Yeah, that makes sense.
So if there was 2 red cells, it would be
a C.
A C.
Yep.
So pretty much I've managed to implement that. And going forward, if I was to test again, I would add a swapping L50, because as we know, it does lower the probabilities. If that's the only thing wrong with a trade, you should be taking it still, because that's technically a great setup. The only thing that's wrong with it is it's a swapping L50. If you have no divergence, RSI isn't oversold or overbought, it's out of the Asia range, you have a really clear trend in front of you. So
yeah, no, this is good data. People will definitely love this.
Yeah. And I think knowing that, knowing how the grades perform, we all know stacking as many probabilities in our favor as possible, and being selective is what's going to give you the best approach going forward. And I think just to drive home that point, you got to limit the amount of trades you are taking. As a day trader, it can be frustrating, going 1 or 2 weeks, showing up every day, consistent routine, and not pulling the trigger. I've been through this process a few times, and it's just, as time goes on, as I get more experience, it's just something, it's part of the process. And being ultra conservative and selective with your trades, your win chance is going to go through the roof, and that will in turn result being more profitable. Because once again, having a systematic approach with this data, knowing being more selective, taking less trades, may not give you the highest yield of return, but at the same time, it isn't possible to take 50 plus trades per month. And at the same time, you got to remember, we have emotions as humans. So we're going to sit in front, even though I have all this data in front of me, you're going to do extra analysis. And you can't have that as a trader. You can't have that. You got to be unbiased, but you can't let other emotions and opinions flood in. If another trader, let's say James, is looking at another pair, I've had this conversation on many of my coaching calls with the AceFX traders that they will look at, they may see something that James is trading or another AceFX coach trading, and they might not have it on the watch list, and they'll put it on there because they may see something they haven't seen before. But you got to focus on your own probabilities and your own systematic approach, because every trade is different at the end of the day.
No, I think you're spot on with that, bro. And I think it was Mike Bellafiore that said this, but he was studying traders. I think, if I remember this correctly, he was studying traders that work at his prop firm, and they realized that it wasn't so much that traders needed to add winning strategies or winning trades. They needed to remove losing trades. And by removing the losing trades, they increased the win rate. They made money more consistently. So it's really about thinking about it. Hey, how do I cut out losses? A lot of you guys are either, like we said, in ASFX or thinking about taking the courses. Those are winning strategies. We've proven that with a lot of backtesting. Jerome's done just as much backtesting, if not more, than I have. So with us and other traders also doing it as well, I feel like that part of it is already proven. So I feel like if it's not so much of a question of adding the wins, it's okay, I know how to see winning setups. How do I narrow it down to the ones that win more than the other ones? Which ones win at a higher probability than the lower ones? And like we talked about here already, 3 different parameters within the system that you can remove and increase your win rate. And again, it will be less trades, but more wins, more money consistently. And that's the goal for everybody, to keep it as simple as possible, right?
100% spot on. And I think, just to come back on that point, like with selectivity, it is hard. Like it's hard to sit here, come in every day and just waiting to just
100%.
get that trade. You like, not that but based on the testing, based on the markups, based on the work that the traders are putting in behind the scenes, you can see it as repeatable patterns. And especially doing 800 plus trades, going through historic data and just seeing those candle formations, you kind of pick up on little key points that you see repeat in the live market, and that's the trade you got to hit. And it's the trade that lines up perfectly with your system. All the parameters are ticked, and it's pretty much a B plus trade. Like it's ready to go. You just got to wait for the entry signal and enter it. And the most frustrating thing for me is this week and last week was there was so much opportunity ready to present, but the candle formation just never hit it. The entry signal never was 100%. So you got to sit on your hands. And it's so inducing because it may go higher. You anticipate, your direction. You get your directional bias through the L50 and the EMAs. And at the end of the day, it does what you thought it would do, and you weren't involved. But that's part of the process. You've got to be comfortable with letting those trades go. And it's a very hard part of trading. Like I remember seeing quotes like, sitting on your hands will make you more money. And I never really understood that until you actively start trading the market. Like it's so true. And this comes down to being selective. If you can filter out 800 trades to 140, and I'm sure if I had divergence in there, I would probably have way less trades if I filtered that out. And it would just give me an ultimate trader playbook that I rock up every day to my desk, and I follow a systematic approach. I'm waiting for the L50 has to be perfect all day. I'm waiting for the EMAs to align with that. I'm waiting for price to break out of the Asia range. I'm not looking for divergence, and I just wait for my entry signal and I enter it. And that is my consistent routine. You show up every day doing that process over and over again, and you will literally turn a profit. It's as simple as that. It's not easy because, once again, we are humans. We're going to make mistakes. We're going to get emotional. We're going to get opinions involved, but we need to learn to detach ourselves from that process. And that's what that data shows us.
I love it, bro. So tell everybody where they can go to learn more about the systems, where they can go to learn more about the back testing. The feedback on the back testing course this year has been great. So that's why
I've been getting a lot as well.
Yeah, I want everyone to keep doing it themselves, because I think when people do the testing themselves, they get more confident in the systems. That removes the anxiety while trading. It makes them more fluid in the market. So I think the back testing is only helping the people that are willing to put in the work. It's not easy, right? Because it takes time, but feedback of the people that are doing it, they love it. So we can put links in the description.
There'll be links in the description. acefx.biz. They got all the stuff you need to learn about back testing. I have videos.
We got it all.
Well, yeah, we're like becoming like an ultimate trader's destination, really.
That's what I'm trying to do, bro. With the help of you and guys like James and other traders, hopefully in the
Yeah,
future that want to be consistent and want to be a part of the team. Yeah, absolutely. That's the goal.
100%. And I think to kind of top this off,
Yeah,
AceFX is a proven, tested, profitable system. Doing the extra work, the back testing, the markups, I still feel is necessary if you are struggling, if you are new, and if you want to be an independent trader. And I think adding your own little personal touches to it. Don't change a massive amount straight away. Make those
right.
1% changes. Like with my candle formations, I've kind of taken out a few candle formations, so it even makes me even more selective going forward. It
I
helps
love
me
it.
have a really tunnel focused approach into my trading. And I will admit, it's become very boring, my trading, but good trading is boring. And
I was
I
just going to say
tweeted
that.
that the other day. Like
Yep.
it's once again another thing I never really understood in the early days of trading. But like when you become so systematic and have that exact same approach with your analysis and your trading every single day, it gets very boring. Like the excitement's gone. Like it's
So true,
crazy.
bro. So true.
So I hope you guys got a lot of value out of this video. Once again, I'll put the links in the description below. You can check out the AceFX backtesting spreadsheet, the AceFX courses. Austin just released a crash course as well, which is I've gone through that and it's amazing. It's got a lot of value in it, and it's cheaper than lunch, which will amaze me because like you don't get that value anywhere else. It's definitely worth the commitment to check that out. And I've got a lot of value on backtesting on my YouTube video as well. So thanks for being on my video, Austin. Glad to have you here. Once again, I appreciate all your knowledge, your systems, your support and everything. So thank you.
Yeah, bro. Absolutely. I appreciate you for having me on, and I look forward to our next video.
No worries. Thanks, bro.